Hello and welcome back to another video. Today we're going to be talking all about the Bitcoin halving, and in particular the Bitcoin halving in 2024, and just how we can use that to our advantage when we think about how the Bitcoin halving has impacted the price action of Bitcoin over the past number of cycles, and looking at that analysis and breaking down the different trends over those cycles to see how we can take advantage of it over the next 12 to 24 months. So what is the Bitcoin halving? Essentially, every 4 years, the Bitcoin reward gets halved for the miners who mine Bitcoin. So essentially, back in 2009, when Bitcoin was first launched, the block reward for every time a miner solved a block and added it to the blockchain, the reward for that process and doing that work to secure the network, the reward was 50 Bitcoins per block. As we can see, over every 4-year cycle, that amount of Bitcoin block reward gets halved every 4 years. So during the current cycle, we're at a block reward of 6.25 Bitcoins per block. Since 2009, that has halved from 50 to 25, from 25 to 12.5, from 12.5 to 6.25. And for the upcoming Bitcoin halving in April, May of 2024 this year, that reward will get halved once again to only 3.125 Bitcoin per block. So, we've seen the evolution of this over the past 4 cycles, but also, thinking about how the block reward was so high, and this being a difficulty adjustment for the miners of the network. Back when people were mining Bitcoin in the very early days, you could mine Bitcoin on your computer with a simple CPU and earn good rewards. But as the difficulty adjustment increases every 4 years, the block reward gets halved. But miners also have to get better equipment. The evolution of CPUs to GPUs and graphics cards and very complex mining rigs that now have to be used for securing the network and doing the mining of Bitcoin. We've seen that evolution happen, and every 4 years that block reward gets further diminished, causing a supply shock to the Bitcoin blockchain. So we know this happens. It happens every 4 years, and it's scheduled to happen right up until the year 2140, when the last Bitcoin will be mined. At the moment, there's already 19.3 million Bitcoin in circulation of the 21 million that will ever exist. So as this reward continues to diminish by 50% every 4 years or every 10,000 blocks, it causes a supply shock every single time, and it gets more and more scarce, and the deflationary nature of Bitcoin only continues to kind of permeate throughout society and throughout culture. So, how can we use this to our advantage? How can we think about the cycles of Bitcoin and how we can take advantage of the price action every time there's a halving event? Well, we can take a look at the technical analysis for a moment. Now, I'm not an expert technical analyst, but what we can see here is somewhat of a pretty clear pattern for the behavior that Bitcoin exudes every time we have a halving event. And we're going to look at a couple different charts to kind of illustrate this, but basically what we have here is the weekly chart for Bitcoin over the past number of years since 2012. And every time we have this halving event, we see basically what we're seeing at a very high level is in the 12 to 18 months before the halving, in about the 12 months before the halving, we see basically price accumulation. So if we zoom in on the 2016 halving and we take a look at the price action basically in the year before this happens, we can see that basically there is price accumulation in the lead up in the 12 months before the halving. So it's kind of difficult to see here because this chart is not a logarithmic chart, but basically we can see that there's price accumulation happening all through 2015 until July 2016 when this 2016 halving occurred. We can see this price accumulation, and then the other macro trend that we see is basically the market peaking 12 to 18 months after a halving event. Well, what we saw here in 2016 was a 12,400% increase in the price from the previous low, but basically that top hitting about 12 to 18 months after Bitcoin halving. Now, every time there's a halving, people think that the price is already baked in, or that the halving is already baked into the price of Bitcoin at the time that it happens. But again, if we go on to the 2020 halving, and again, we see in that year before the halving, we see starting in 2019, we see this price accumulation happening here, a little bit of a small retracement, and then once again, in the 12 to 18 months after the 2020 halving event, we have a market top and a market at the top of the bull run here with another, huge increase in price at 2,336% increase since the previous cycle low. So again, the Bitcoin halving happening in 2020, what we're starting to see now in 2024, what we're starting to see, in the 12 months prior to the halving, we're starting to see that price accumulation beginning to happen again. So right from, the end of 2022, all throughout 2023, we saw this price accumulation happening, with the 2024 halving event coming around the last week in April. Can we think about how this is going to impact the market over the preceding 12 to 18 months? So again, what you want to be thinking about is accumulating your positions in the 12 months prior to the halving, and then being in your positions ready for being able to exit those positions potentially at the top of the next bull run, 12 to 18 months after the peak, 12 to 18 months after the halving, or thinking about the exit strategies, or maybe just the long-term positions you want to take with all of this in mind. The other stuff worth mentioning as well is the stock to flow model, and we can see again here how the stock to flow is mapping with relation to the amount of days to the next halving. So the colors in the chart here represent the distance from the halving. So again, what we're seeing with the stock to flow model mapped out in 2012 is price action of Bitcoin really taking off after the halving event. And we see that happening, obviously, with this purple color here, and then rising up to, red, orange, light green for a peak in the market before the retracement begins to happen after that. So we see that peak happening about, 800, maybe to 1,000 days from the next halving event. The market begins to correct. It comes back down. We begin this kind of accumulation phase the year before the halving event again. And then once the halving event hits, we have that price action moving up to a bull market high. Again, about 800, 1,000 days out from the next halving is when we get that market peak before it declines again, retraces, and again in this kind of year before the next halving, we've got this, this price action increase, slight little correction here, but again, mapping out towards this kind of 1,800 day mark from the next halving before it begins to retrace. So again, we're seeing this accumulation happening here throughout 2023 as we're going up, and due to hit the halving here, again, the stock to flow model mapping that we're going to surpass previous all-time highs by July of 2024 this year. So it'll be interesting to see if that plays out. The other thing that is worth mentioning in this chart as well is the rate of diminishing returns, potentially with how it's played out in the past. We've got the extreme percentage increases in the 2012 halving. We've got less of a percentage increase in 2016 and even less in 2020. And it's interesting to think about how that diminishing return is happening on a consistent basis, and whether that will trend towards the next halving and if that will happen. It's hard to say if that will actually happen, but another insight that we can look at here since the 2020 halving in particular is the amount of Bitcoin that is actually being held on exchanges and the amount of illiquid supply. There's an interesting relationship there. So basically the illiquid supply of Bitcoin has been increasing since the 2020 halving. So this is the amount of Bitcoin that is not moving. It's being held in wallets for more than 155 days and is basically not being moved by people. It's being held in wallets and is not being transferred. So what this means is there's more and more people that are holding on to their Bitcoin and not trading or exchanging it as much as in previous cycles. Coupling that with the actual Bitcoin supply and the balances that is being held by exchanges, we can see this inflection point in 2020 as well, where almost every exchange is having the amount of Bitcoin balance held on their exchanges significantly decreasing, whereas for the 5-6 years before that, it had been increasing. We can see this trend. Basically, if we drew a line here and just the trend lines for all of these major exchanges is trending down for the amount of Bitcoin that they're actually holding on exchanges. So ultimately, this comes back to the supply and demand for the amount of Bitcoin that's going to be available and the supply shock that the Bitcoin halving has, coupling that with declining amount of Bitcoin that's actually available on exchanges at the moment, and how, when there's so much talk about ETFs, there's so much talk about institutional money coming into the system, and the amount of Bitcoin that is going to be available for miner rewards decreasing later this year, and the amount of Bitcoin that's being held on exchanges continuing to decrease, in a manner that's almost alarming for the amount of people that are going to be wanting to get their hands on it in the next 12 to 24 months. It's going to be very interesting to see the price action over the next year or two as we move towards that 2025 bull run, and the amount of price action that we're going to see over the next 12 to 24 months. So if you like these videos, if you find them interesting, please give a thumbs up below. Don't hesitate to subscribe as well, and we will see you in the next one.